and welcome to this podcast, brought to you by Aram, which has been trusted for 25 years across the globe to improve collections and recoveries, and Just, which delivers better debt outcomes. With me, your host, Steve Coppard. It's time to grab a cuppa as we give credit where credit's due to our expert guests. For this end of Season 1 special episode, we have a cross-industry discussion with our expert guests, all of whom are podcasters in their own right and work in financial education and wellbeing, the third sector and debt technology. We discuss the themes that we've seen through our own podcasts, the state of the nation, the practical steps we can take to make improvements, and where we think things are heading over the next year. Let's dive straight in and find out more about our guests' expertise in these areas. Hello and welcome to this very special edition of Credit Where Credit's Due. It's our end of Season 1 finale, the end of the show. And today I'm joined by not one, not two, but three expert guests who are all podcasters in their own right. So you know who I am, so let me get on and introduce you to our panel today. Phil, can I come to you first, please?
Yeah, hi, I'm Phil Holdsworth. I host the podcast Wisdom Chat, where we talk all things money and well-being. I'm also the founder of Aurum Gold. We're a company that specializes in money psychology and money capability, and we help employers improve the financial well-being of their employees. So that's me, Phil Holdsworth.
Thank you, Phil. Alison.
Hi, Steve. Thanks very much for having me today. So my name's Alison Dunn. I'm the CEO of Citizens Advice in Gateshead, but I'm also Executive Director of a community interest company called Society Matters. And our collective vision is to create a fair society for all with lives well lived, which is a pretty big ambition, but you've got to aim high. And I'm also a podcaster. My podcast is called This is the North, and it's about disparities in health, wealth and opportunity between the North and the South. And it's a great opportunity to showcase some of the innovations, some of the opportunities that exist in the North.
Thank you, Alison. And last but by no means least, Paul.
Hi, Steve. My name is Paul Sweeney. I'm co-founder at Webio, a conversational technology company specializing in the area of credit and collections conversations. I also host a podcast called Credit Shift, where we look at all things strategic in the credit industry.
Thanks, Paul. For the benefit of the audience, when we were setting this event up, one of the things that I spoke to everybody about was the fact that I'd noticed this theme from doing the podcast, and this is the one thing that really sticks with me. And it's the fact that where regulation ends, there's often a gap between that and where real people's lives begin. And in that gap exists the opportunity for exploitation. One example of that would be the regulation of the subprime credit market, high cost short-term loan market, otherwise known as payday loans. So we've regulated that pretty much out of existence. And the two arguments on it, on the one hand, which I find very difficult to disagree with, is actually what we've done is stopped people from accessing unaffordable credit. But then has there been a product to replace it so that people can find affordable credit when they need it if they don't have the best credit ratings? And of course, therefore, you see a rise in illegal money lending, in loan sharks. So I wonder if I could stick with the same order and Phil, come to you throughout your sort of career in podcasting. What's the one thing do you think that really sticks with you over that time?
I mean, that's a brilliant question. I think the one thing that really resonates with me in terms of what's stuck is just understanding the drivers behind why people make the decisions they make in life. And virtually, I would say probably 3/4 of the people I've interviewed so far have always touched on that in one way, shape or form.
Thanks, Phil. And I guess that sort of resonates. When we work in debt resolution, we are not resolving debt. We are trying to help people in debt to resolve debt. I wonder, Alison, do you have any thoughts on what Phil said there?
I think the first thing to say about illegal money lending in particular is often when people get themselves into an illegal money lending situation, they don't even realise that they're taking what we would describe as credit out in the first place. It's the sort of transaction that happens at the school gate when a mate offers you a tenner to help you through a difficult day, or an extended family member offers to get your car fixed. These are not necessarily recognised as credit situations, so people are in them before before they even realise that, that's what's happening to them. And it brings me on to an episode that I recorded on my podcast about suicide. And the theme of that was that suicide isn't the cause of death, it's actually a means of death. And what we mean by that is the causes of death are often inequality, disadvantage, gambling debts, financial debts, relationship breakdown, all of the things that happen when a credit situation goes wrong. And I think that really stuck with me. Suicide is not the cause of death, it's a means of death. And I think that's really powerful.
It's something that we know through the work that the Money and Mental Health Policy Institute did. It's a while ago now, but I think it was like 420,000 indebted people in the UK every year consider suicide, and then 100,000 actually attempt it. Paul, could I come to you? Anything first to say on anything that Phil and Alison have mentioned there?
Yeah, I think every week we go through the numbers of the cost of living crisis and the numbers that people have to juggle to make ends meet. And it just seems like it just doesn't add up. It doesn't make sense that you're a person who's in debt through their own fault. It's like you're in a situation and these numbers just don't add up. And just looking at the tide of increases across all costs, it seems kind of unavoidable that more and more people will be in trouble. But from the mental health point of view of it, I think not the takeaway, but when you're in a when you look at conversational data, you look at what people are actually saying in conversations, you're struck by the amount of times that people are waiting on like a payment from the council, or they're waiting for a piece of evidence from another agency, or they're waiting on something else to happen, and they get kind of caught between things, and then they've missed something really important. So it's that kind of cascading effect of people being dependent on a whole lot of other things happening in the right sequence for them to get that one thing done. And I was kind of surprised by the amount of times I saw that. What I took away from that from last year was there's a lot of coordination, a lot of things that have to happen from parties that are not under your control that affect whether or not you're going to get to pay that bill or not. And that must be enormously stressful.
I agree with you, Paul. And I think one of the things that has become apparent, if you go back 18 months, the advocates in the industry were saying, you must refer people to free debt advice. And then maybe, 3 to 6 months after that, it became, and you should do income maximization as well. But today, the referral networks have grown, and it's grown out to places like Surviving Economic Abuse. It's grown out to Cruise Bereavement Support. It's grown out to Macmillan. It's grown out to GAM Care, to Alcoholics Anonymous. And I think it's a recognition of all the different types of scenarios and barriers maybe to us being able to lift people out of the burden of debt that people present with. But absolutely, you're right. The numbers don't stack up today. There is something really interesting in that around the way the system works. Phil, do you want to come in on that?
Yeah, Steve, I completely agree with what you've said. And it just reminded me of a personal experience where just wanting to cancel something. I often say to people, when you're managing your finances, you need to get into a routine of reviewing what you're doing. So going through that review, you think, hang on a minute, I'm not using something. Let's cancel it. And I don't know if you've noticed this, but there's a lack of direction on websites for where you can get like a telephone number to phone somebody so you can talk to somebody and get something cancelled, or even an email address sometimes. I've noticed it with utility companies, communication side. I had an experience today, and it just reminded me of frustration that some people must feel. Either they're not engaging with online things and they can't do, and so where do they go when they want to sort of adjust something? Or if you can, and I'm a savvy person, but when I'm in that situation, it becomes extremely frustrating, and you start to realize then what's contributing to the despair that some people feel when they really want to do something about the circumstances, but it's almost like everything's against them being able to do that.
Alison, let me bring you in on that.
I think there's 2 points that I want to make that are really relevant to this statement of the numbers don't add up. The first is, if we look at something like the Department of Work and Pensions Household Support Fund, which is a crisis fund which is designed to support people who are at risk of going cold or hungry, particularly during the winter months. The word crisis suggests that a one-off event has happened, something like, you've lost your wallet or your appliance has broken down and you need a one-off piece of support. But actually, more and more often, the people who are coming to councils and advice agencies for crisis support, it's not crisis support, they simply don't have enough money coming in, and it's actually income top-up that they need. That's very, very different to what that fund was intended for, but actually it's been topping up incomes. And that tells us something, I think, about, certainly speaks to the point that Paul was making about just not simply having enough money. The second point I wanted to make is that actually you don't have to necessarily have taken credit out in the way that we tend to think of credit to be in debt. So when we think of credit, we tend to think of a loan or a credit card, and it's very easy to see how, if you've made a commitment to take a loan or a credit card, how you could end up in debt. But actually, some people don't have any of those mechanisms. They're simply in debt because they've taken on a rental property, and rents have increased, significantly since that first contract was signed. Energy costs have increased if you're on a prepayment meter. Your standing charges accruing whether or not you're using any energy. So we do also have to be careful about, the types of debt. It's not necessarily that somebody has taken on commitments over and above what is affordable. It's sometimes that debt accrues simply from the absolute basics of living a basic standard of life.
When I did the podcast with Kath Wohlers from the Illegal Money Lending Team England, she was saying to me, there's sometimes maybe a bit of an attitude or a thought in the resolution industry, the debt resolution industry, that people on lower incomes who are in debt simply, spend too much or don't make their money go far enough. And her point to me was, actually, if you want to see somebody who can budget really well, look at a loan shark victim, because they've had to. They account for every single penny.
Yeah, I mean, I find it extremely patronizing, and almost it induces rage in me when I hear conversations like, well, they've got, for example, a flat screen television, or they've got Sky, or they need help to cook on a budget. If you have absolutely no disposable cash available, and you've got 2, 3 children at home, or you're disabled, or you've got someone in ill health, it's a perfectly rational decision to have Sky Television if that is the absolute only entertainment that you can afford in your family. It's a known expense. It's something that you can spread the cost of over a year. It gives you 24-hour entertainment if that's what you want. It's not an excessive thing to do. But also, things like cooking on a budget, my goodness me, if you were surviving on universal credit, you absolutely know how to cook on a budget. So I think, there's just a real disconnect between the haves and the have-nots in terms of what's actually going on in the world right now.
Paul, did you want to contribute on that particular part?
I think that a lot of what you hear about how are from people who have not worked in the business, and from people who've not done any research on it. So it's just not any sort of informed opinion. Cooking with fresh vegetables, the problem of getting to the shop, of keeping them fresh, of making the time, nowadays of having the energy as well. Yeah, it's maddening that it almost seems like a political decision that you're going to have this belief as opposed to any sort of grounded in everyday reality.
When I interviewed Muna Yassin from Rooted Finance, one of the things she said to us is, the political leaders in the UK need to decide if housing is a basic human right or not. That was something that really hit home hard for me. Phil, let's come back to you.
Yeah, I was going to add as well with regards to society's response to people where they don't understand what's really going on and they're very quick to make a judgment. We are like that as a society, and we're often like that because of what we're being told coming from the top down. So, for example, we've often been told that we need to be a nation of savers. So I know loads of people who save what they can. I know there's a lot of people who are working and living from hand to mouth, but where individuals can save, when I've asked them what they're saving for or their reasoning behind it, they look at me as if to say, well, I just do it because I'm supposed to do it. And how do you feel about it? Stressed. And you're thinking, well, shouldn't everything that we do, shouldn't it be about reducing stress? So whether it's lack of money, how can we look at ways in which you can increase your income, or are the benefits that you're not applying that you're actually eligible for? And so we're sort of looking to help them. But the emphasis, because we have a perception in society that certain types of behavior are that you're good with money because you save and you're bad with money because you don't save, we're not understanding why people behave the way they do. And so we jump into the wrong conclusion. We make judgments, and that in itself adds to the stress and anxiety that people are facing when they are facing financial challenges. benefits.
Yeah, absolutely, Phil. Alison, let me bring you in on that point.
I would absolutely agree that there is a lack of understanding about why people do the things that they do and the context within which they live. That is true. But I think there's a second point there that sometimes people are not aware of, and that is that it actually costs more to be poor. So there's a thing called the poverty premium, which tells us that if you are poor in a low income household, you are going to be spending between £430 and £2,500 a year more simply because you are poor. That is because things like discounts, where you might get a discount on your insurance if you pay it up front on an annual premium as opposed to a monthly premium, aren't available to you. The higher interest rates that you can sometimes get as a saver if you've got over a set amount of money aren't available to you. You often cannot get a free overdraft at your bank because you're considered a risk, so you're immediately incurring bank charges. You, for example, are being charged more because you cannot pay by direct debit. So that all adds up, if you are already poor, to additional expense. And actually, the North East has the highest poverty premium in the country, followed by London and Humber, which I think is a shocking statistic. And if you happen to be disabled as well as on a low income, the situation is even worse. A disabled household with one disabled adult or child in it, they need an additional £975 a month just to have the same standard of living as someone who does not have a disabled person in the house. I mean, I just think that's a shocking statistic. The system is just absolutely against those at the lower end of the income scale.
Phil, I'm going to bring you back in there, and then I wanted to maybe draw some of those points together because I'm sensing a theme.
I was immediately thinking, as Alison was speaking, about the decision to almost like reduce the benefits in order to fund tax cuts. That's been a conversation been going on, and I sometimes I'm absolutely aghast at the thinking behind it when you've got people who are already struggling being pushed even more, and people who weren't now become people struggling because of this idea that by taking from the poor to give to the wealthy, because let's face it, tax cuts, it's going to be the people who've got the money who are going to benefit from that. And I just can't understand the mentality behind that. And I can understand then the despair that people feel as though this is never going to be resolved for them.
Paul, let me come back to you first.
Yeah, it just strikes me at the policy level, like that's kind of the political end of the spectrum where kind of how you run your country kind of gets agreed. I think though at the kind of narrower end of that question is how like the problems kind of occurred, person is in trouble, they have like very difficult circumstances. I was just kind of reflecting on what it is that I would look at from the last year that I would kind of go, God, that's really impactful or powerful thing. And I think it was when I was looking at payments that have been missed or commitments not made because a piece of document hasn't come through or an approval hasn't come through from a third party or a government agency or a local council. The thing is, if you were able to just ask questions, like whoever at a utility or a company or an agency, the opportunity to ask questions seems to me to be underused. And if you could just find the opportunity to ask the question, it allows you an opportunity to learn more about people's lives and their circumstances. And it just strikes me that the superpower is ask questions. And that's one of the biggest, and it's a very simple thing. I know it seems very simplistic, but if you were better at finding out when you should ask questions and how you ask those questions and how you follow, I think you do an awful lot of good.
I guess there's a few things that we can sort of string together there. We've spoken about needing to get this right and have it understood at the political level and the how we run the country. Alison, you mentioned the poverty premium and you mentioned, the disparity then with somebody who's then also got a disability. And again, I go back to my interview with Muna Yassin, and she was talking to me about diverse ethnic communities within the UK, which actually make up 20% of our nation. It's 1 in 5 people from a diverse ethnic community, and they will pay on average £250 a year more than a white counterpart for car insurance. And there were a number of other stats, and they're actually launching a big data gathering campaign. And to your point, Paul, it's because nobody's actually asking the question that nobody's gathering the data on this stuff at the moment. Phil, you mentioned earlier that cancelling subscriptions and things like that is made really hard. And I think I won't mention a name, but I'll infer enough that, a big online retailer that shares its name with a big rainforest, I believe in the States was looked at under the anti-competition laws because it was so difficult to cancel their subscription service. And all of this, it feels like to me that people are being bombarded from every single angle. Now, I don't know. I'm going to come back to you each in turn and ask: is that too much? Am I going too far with that statement, or do we broadly think that actually, if you're not on such a decent income, then it's just that much harder to get out? So, Phil, let me come to you first, and maybe you could touch on what you think that the psychological impact of that is as well.
I would say, Steve, that you're not going too far in what you're saying. I think people are being bombarded in so many ways. And I'll add something else into the mix there, and this is the scams and the fraud. And with the constant development of technology and ways of doing things, how easy it is, even for somebody like me, fall foul of those things. So you get to a stage where it's almost like there's a palpable fear of, at one time, I would say some people who had money, they would spend time fearing, well, what if something went wrong? What if I lost it all? But nowadays, I think people just simply trying to live and do what they need to do to have a reasonable life. They are being bombarded from every angle. And when you've got the frauds and scams thrown in there, and the perceptions or the beliefs that I can't use online because what if somebody pinches all my data or something like this, as though they're waiting for you to actually press the keys and start typing. You can see then why people are getting quite anxious about the world of finances and what's happening and the direction it's going. There's such a focus on making wealth, but we're losing the human element.
Thanks, Phil. Alison, maybe I could come to you, and please feel free to challenge my sort of bold statement, but I'd be interested to hear from you what you think, not only the social, but the societal impact of that is. What does it say about us as a society, and where's it going to lead us?
Oh, I mean, that is a huge question. I'm going to take the first part of it. And that is, people are being bombarded from all sides because actually the poverty premium and the disability premium aside, which I've already described, those things are bad enough. But actually, when it comes to things like our tax system or the universal deterrents that are put in place to keep the cogs of civic society turning, these often have a more detrimental impact on those at the lower end of the income scale. So to give you an example, okay, I go and I have a parking infringement, and maybe my parking ticket has run out, or maybe I've parked on a double yellow line. I get a fine for that. And it could be anything from £30 up to maybe £90. That's hugely irritating to me, very inconvenient, but I can afford to pay that ticket. But if actually I'm on low income, if I'm experiencing poverty, disadvantage, any of the things that we've talked about today, as a percentage of my income, that £30 to £90 fine could wipe out my entire disposable income for the week. And that is a terrible indictment. So the universal deterrents that we have in place as a society are disproportionately affecting those who are experiencing socioeconomic disadvantage. The standard charge is another perfect example of that. So we pay a standing charge on our utility bills. We'll say, for the sake of argument, it's £1.20 a day. Again, the richest people in the country are spending £1.20 a day on their standing charge. So are those who are on universal credit. That can't be right. So I think that, there really needs to be a conversation at a political and societal level about what we want to be as a society and what is fair. And I think there's a big case to be made for the introduction of social tariffs for low-income customers at all levels of our consumer experiences, whether they be insurance, whether they be consumables, whether they be energy, whether they be the universal deterrents that are put in place. But it simply cannot be right that the richest people and the poorest people are experiencing this at the same level of cost. We have to do better.
Thanks, Alison. And look, Paul, just before I come to you, I just wanted to draw out something that came up in the podcast I did with Devon Galani from Policy in Practice. I asked Devon about universal basic income because I'm aware that a couple of pilots were about to get off the ground, and he'll kill me if I get this wrong, but from memory, I'm pretty sure that Devon said if you take universal credit and get rid of automatic deductions, you're sort of 95% of the way there to universal basic income anyway. So, Paul, going back to that big statement I made, I mean, your thoughts on it, please. And is there anything that you see in the technology space that could actually help in this area?
Yeah, thanks. I'm always just I grew up myself in a house where money was short, as they say. We found ourselves all of a sudden with no money for a number of years. And so I know what it's like to have a letter drop through your letterbox and just not know how that's going to get paid. And I kind of in memory think of it as like a little bomb landing in the house. It's like a detonation goes off, the temperatures change, people's reactions change. It's all of a sudden very tense, voices get raised, and it's because you're living in a whole emotional soup from there on in, and you really have almost like, look, you'll know this far better than me, Alison, about what the technical terms for it is, but it feels like a trauma that gets detonated every time a letter arrives or a call has to be made or a call is being avoided. And it's like, while there's conversations here about the structure of government and the structure of payments at the government level, there's also the kind of emotional lives that people live in, like the society that you live in, the house, the family, you yourself. And I think of it like we don't think enough about people's mental state and their emotional state when we're trying to interact with them. And because we don't do that, we set ourselves up to fail on both sides. And I remember someone saying to me, look, if someone gets angry with you, just think of their anger as powerlessness. You've made that person feel powerless, and their reaction to their feelings of powerlessness is anger. It just makes me think that there's so much more that can be done by thinking about things as their emotional situation, how things get embedded into people as kind of, I don't know if I'm using the word correctly, that it is a kind of trauma, but it feels like when something happens, the trauma is relived every single time you have to have that financial conversation. And I just think that if the technology can do something for that, then it's more meaningful than just saying, hey, you can do business online. That's what I'd like to say about that.
Thanks, Paul. And now I guess that everybody's had a chance to address that statement. Let's just go full circle. I'll bring in Alison first and then Phil to see if you've got any further comments.
I think Paul's absolutely right when it comes to how people present to us. Anger is a form of communication. We might not like it, it might be uncomfortable to receive it, but it's telling us something. And actually, in many cases, it's very useful for us to hear that, particularly if it is the only way that that person is able to express themselves in that moment. But often, as providers of service, our response to anger or to anything that ultimately we don't want to hear, that feels the least bit threatening to us, is to then proceed to exclude that person from service and to blame them for the very thing that we think is going wrong. And actually, as Paul's described, if we could bring some trauma-informed practice into the way that we approach people, we'd have entirely different experiences. Our staff would understand where that anger was coming from. They would understand how to de-escalate it. They could put in place strategies to help that person communicate in a way which is more helpful to both parties. But until we do that, we are going to continue to meet with people who are very disgruntled, very angry, very upset, very emotionally responsive to what's happening to them. We're going to continue to exclude them from services, and we're in a downward spiral from there. So I think, trauma-informed practice, and if technology can help us to pinpoint the indicators for some of that and to respond in a more empathetic way, that would be a great outcome.
Just before I bring Phil in, what I heard there, it put me in mind of the grief curve or the transition curve as we use it in business. That first off you have denial and then you have anger, and then you do sink down into that pit before, maybe, and maybe this is our role in this, right, is to provide the tools for people to start experimenting and come up the other side again. So Phil, over to you.
I like what Alison said there, particularly, anger is an emotion. And we know from both medical and the scientific communities that when people are in an emotional state, their ability to be rational diminishes exponentially. So when we think of people who are making choices in life and they're not the kind of choices we would make or that society would expect make, and then there's that judgment comes in, there's such a lack of appreciation of what that person's actually going through at that moment in time and why that's impeding their ability to think more rationally. So people say to me they've got a financial plan, and one thing's for certain, just because they've got a plan, I mean to say it's a good plan, but to them it could be the perfect plan for them. But somebody like me or anybody else could look in and say, actually it's not serving you well, but they're convinced of it. So it's their perception. But if we don't understand how other people might think and how the emotional element, whether that be anger or any other emotion out there, can affect their ability to think rationally, then we're missing something in terms of how we support and encourage people down any particular path.
If I could speak to that as well, actually, Steve, before you come back in, because there is an actual thing called implementation decay, and it's been properly researched. The evidence is there for it. And what implementation decay is this idea that actually only 40% of people go on to solve the problems that they face, even when they know the action required to solve their problem. So I can give you a practical example of that. Okay, so your insurance is coming to an end. You know that your end date is perhaps going to be tomorrow, but you've not taken the action to get a quote and to make sure that that insurance continues. It's a very, very straightforward thing to do, but for whatever reason, you've not got round to doing it. So this sort of principle is that, like I say, that only 40% of us, whether we're in a good position or a bad position, only 40% of us who have a problem that needs to be solved will actually take the action required to solve that problem. Now, that's not necessarily what we would expect, but I think it's quite telling.
Yeah, it's a good point, Alison. So I guess I started this podcast on an upbeat end of season finale, end of the show, and I'm now feeling thoroughly depressed. But actually, also thinking attitude of gratitude. Right, I'm not the one who's actually going through some of this stuff. So what I'd like to do now is to come back to you, and what I'll do is I'll go first to give you a bit of thinking time. But what are some practical things that we can do in our own organisations or more broadly as society to help us address some of these concerns in sort of personal finance, collections and recovery space? You know, how do we first do no harm? And I guess the thing that occurs to me, and I'll go back to that, you know, getting people out of debt, not debt out of people. It's a tagline I've been using for years, and it's a subtle difference. But actually, when you look at things like the Behavioural Insights Mindspace framework, which talks to a lot of the ways that we actually engage with people, about some of the incentives we can give them. So one of the things I heard earlier, Paul, you were talking about the trauma bomb of the letter dropping on the doorstep, and I've been through that myself as well, so I completely understood where you were coming from. But actually, you know, some of the stuff that's buried in the Mindspace framework would tell us that if you were to present somebody with a list of options, the outcomes of engaging, so you could say, we would be really happy to, you know, just accept, if it's affordable for you, to just accept a repayment over 6 months or 12 months. If you want that, dial this number and press option 1. You won't have to talk to anybody, or go on our chat bot and just select option 1, and you can do that. Or actually, we've got a range of grants that you could be entitled to, or we think you're entitled to more benefit. And if you present people with options, you're predetermining the outcome of their engagement before they actually have to make the decision to engage, which makes it feel a lot less scary. So I think for me, there's something really around improving communication, improving the intelligibility of our communication, and improving the way that we set numbers out and the options for people to make it a much more engaging and inclusive process, rather than a process where we're basically sending out letters with big red words on them and saying final demands you now owe, and expecting people to engage through that. So that would be my thing that I think for this industry, for the debt resolution industry, that we could all do fairly easily and probably do better. Phil, let me come to you. What do you think that we could do practically to try and help people out?
I think the first thing is recognise that the vast majority of people who find themselves in financial difficulty never intended to be there in the first place. The assumption is because somebody's in debt, well, it's your fault. You've got yourself there, as though that's their intention to go down that route. I honestly have met very few people who have actually set out on that particular course. So I think first thing is really to encourage people, that they're not on their own. There are things that we can do to help, despite all challenges we've talked about, and also for them to be kind to themselves. So that's on a sort of personal, sort of emotional level. The other side is just some of the practical helps. We assume that we just throw education. We'll educate people, and yet we never really help people understand their own mindsets and behaviors. You've touched on this already, and I think when Alison was talking about the implementation decay, that if there was some sort of trauma input and understanding of what what it must feel like, and where they might be emotionally, psychologically, that there's empathy, but also there's perhaps a different way of approaching, and not necessarily one size fits all. So I think on a practical level, we try to sort of funnel everybody into one side. That's not going to help anybody, and it's not going to solve the problem. But the other side of the coin is also appreciating the fact that, generally speaking, people did not set out on this journey to be in financial difficulty and then end up themselves thinking, well, I'm rubbish, I'm no good with money, and really put themselves down. We need to actually find ways of being able to build them up and encourage them, get them to a place where actually emotionally they're in a good position, they're more able to think more rationally, and then give them the help support that they need at that point in time.
It's really interesting that you talk about that blame point, Phil, because we understand the stigma and the guilt and shame that goes along with debt. But Ofgem actually published a report in 2021 based on behavioural economics, and it was a proper academic paper that looked at improving bad debt communications. And they found that if you tied the cause of the debt to something beyond the customer's control, then you increased engagement. So if you said something like, we understand that many people are struggling at the moment, and it may not necessarily have been within their control. But then further, if you tie it to a specific event, so if you say, and we understand that during the cost of living crisis following the pandemic, many people have not been able to do anything about this, then you increased engagement even further. So I completely and wholeheartedly agree with that. And there are academic papers that back up what you've said there. Alison, maybe I could come to you. What do you think we could do to improve things practically for people?
Well, I would like to see the introduction of more social tariffs across services, and I use that term in the broadest possible sense. I'd like to see some of those universal deterrents that we talked about be more proportionate, so that those at the higher end of the income scale are paying something which is more proportionate to their earnings, and those at the lower end aren't suffering disproportionately. I'd like to see insurance companies meet the needs of low income consumers. So, repeat schemes like flood insurance, where, there is an obligation on insurers to provide insurance in difficult circumstances or where premiums are capped in low income areas. And I'd like to stop energy providers charging fees for customers that are not paying by direct debit. But importantly, I'd also like to see more flexible methods of payment and also the amounts of payment. If they're expecting £100 and you've only got 10, well, there should be a way for you to pay that £10. So at least that debt is reducing.
There's a point for me in there again around data. One of the things that I think in the financial services industry is with the consumer duty coming in through the FCA, we've seen some of, and of course that isn't going to apply to every sector, but we can share the best practice. And going back to, again, when you spoke about the poverty premium, the disability premium, and I mentioned the ethnicity premium, if we're not gathering data around those things, or even if we're not aware that those things exist, then we don't know what questions to ask of the data. And it's only by asking better questions of the data can we get to better outcomes for people. Paul, let me come to you. Where do you see we could improve things?
I'm going to reiterate some of those points and first start with a story because I'm Irish. So I remember seeing online a lecture by the guy who invented the Khan Academy. It's an online course for learning maths. So anyone can go to the Khan Academy and learn statistics or learn how to do things. And the idea was, because it's an online course, you can be from anywhere in the world, learn maths and get yourself into the next level of education or productivity or even a job. And he showed an example of a number, like 100 kids coming into the program. And some kids went straight up and to the right in a straight 45-degree angle. They learned the course, they passed the course, they learned the course, they passed the course, they're out the other door. Then there's the other kids who kind of went up and then dropped back and then went around and did something else. And it looked like a bunch of skipping ropes had been dropped on the ground, their path through the data. And the guy was saying, do you notice something about this path? And the obvious one is, yes, some kids just go right through. They're the smart ones. And he said, no, he says the difference is everybody made it through. And it's just such a simple point. Because they were in the learning environment they were in, they could take the time they want, they could make the mistakes, they could take the paths that didn't result in an outcome for them, and they were able to get back on the path and get out and pass the exam at the end of the module. And I remember looking at that and going, God, that is so not my experience of being in school, that I would have failed maths every day, I would have failed this other subject every day, and then I'd never get out the other side of that education. And it struck me that people and their ability to reschedule payments, to have variable and dynamic payments, to have different payment methodologies in a conversational flow, in a conversational technology that they're able to ask questions or being probed for further information. It's a bit like being in that environment, but the objective is still to get you out the other side of the box, i.e. to reiterate your comment, it is to get the people out of debt, not get the debt out of the people. It might take a bit longer. It might be on a different schedule. You might need a different interaction pattern with them in some way. But ultimately, if you took a different view, if you reframed the job to be done here, it may be not as big a problem as everyone thinks it is. We're just kind of locked into a set of technologies, a set of processes, and a set of running things that kind of inevitably results in these problems. So I guess your variable payment schedules, having really good questions, and doing that with a real eye on duty of care, and this other small thing which is called intent-based routing in a contact center, and that just means that you're able to route conversations through that kind of a dynamic questioning cycle and make sure that you don't drop them, that they do get to the next part of the conversation safely. So yeah, I think we're all kind of on the same hymn sheet. It's just, how do you get there? Is it changing policies? Is it changing processes? What technologies can help us? And for me, as the kind of the technology person on the podcast, I think technology can be an enabler, but it's not your solution. Like, all the other stuff in the background is really what's going to dig out your problem. The technology can kind of enable it some way, but it's not the solution in and of itself.
Thanks, Paul. That's a really great point. And what I'm gonna pass a comment on that, but just to give the three of you a little bit of thinking time as I come towards the last question. I will give you the question first and then I'll make the comment. So I just wanted us to take a quick look at the coming year and where we think things are going. Paul, just before I get in and ask Phil that question, I guess your response there reminded me of a post I put up on LinkedIn recently, actually, which was the difference between equity and equality. Equality being that everybody starts from the same place, whereas equity being everybody's able to reach the same outcome. And they're subtly different, but there is a difference, and it's largely, I think, based in how much support each individual needs to reach the outcome, rather than giving everybody the same level of support.
Did you see that cartoon where there's three kids trying to look over a fence at a race, and one kid is tall enough to look over the fence, and then the other kid is standing on a box and the other kid is standing on a bigger box, but they're all the same height looking over the fence?
It's exactly that. I posted up the one with the kids reaching up for apples, but exactly the same format. Yep. And that's the thing that jumped into my mind, that picture when you were saying that. Phil, this coming year, where do you think things are going?
There's things I've already started to see in terms of understanding people's mindsets, and that's a growing realization that just education, in terms of promoting financial well-being, that it's about educating them and making sure their money's healthy. In actual fact, there's a realization that we need to understand the emotional impact our decision making has on how we manage our finances and how we problem solve, find the solutions. So I think this year you probably see a lot more conversation about this. But what we really want to see is a real application of how will this then help individuals to really develop through financial well-being.
Alison, same question to you.
Well, I think it's going to be a really challenging year for the third sector, and the third sector has been an essential support mechanism for many of the people who will be listening to this podcast and to the people that they serve serve as well. So, I do think that, again, as a society, we have to think very, very carefully about what we want to be and how we achieve that. And, supporting the third sector is crucial, but more and more often it's coming under threat. But also this year we have, particularly in the northeast of England, we've got a devolution election coming up. And of course, nationally, we've got an election coming up for our government. So, I would encourage everybody, regardless of their political colours and beliefs, to make sure that they fully participate in those two opportunities to influence who and what we are as a society. So, if you're in the northeast, we've got the devolution elections on the 2nd of May. I would implore you to go out and vote. We don't yet know when the national election's going to be, but to simply get yourself out there and vote. It really does make a difference.
And Paul, finally, wrap it up for us. Where do you think things are going this coming year?
I think, Alison, your point on the decline in various third services is something I'm tracking myself. It's kind of very worrying when you're looking at how that's going to evolve over the coming year. I think from my own perspective, I think there's one word that covers it all. It's digital. It's like digital. How can you serve people digitally? How can they serve themselves digitally? How can you help them solve their problems digitally? And it's not that I think that digital is the be all and end all of it. It's that there's so many of the other resources are going to be cut. Like, you just don't have the human resources to throw at these problems. You definitely cannot scale up the amount of human resources you need to support these conversations. So the inevitable outcome of it is that you need to throw digital at the problem. And I think that the trend for the year is just going to be, how do we digitize and what kind of benefit are we going to be able to get out of it? And it's never going to be big enough. I think everyone's going to still be challenged to deliver the services that they're trying to deliver. But I think unless everyone's on top of their digital game, they're just going to get crushed by the changes.
Phil Holdsworth, Alison Dunn, Paul Sweeney, thank you very much.
Well, folks, that's a wrap on Season 1. I hope you've enjoyed hearing from our expert guests as much as I have. Check out the Aram and Just websites and LinkedIn pages for even more great content. And as always, it's goodbye for now.